Hey everybody, my name is Brandon from FCEL, and today I want to talk about FuelCell stock, ticker symbol FCEL, and how it is down over 60% in about 6 months. What we're going to do first is go into Google and talk about the macro story of FuelCell, and then we're going to go into the earnings report to talk about how FuelCell is doing as a business, and then we'll go into the trading charts to see if there's a level or two to buy FuelCell if we want to buy FuelCell. So now let's get started. So here we are in Google, and here's a 6-month view of FuelCell stock charts here, and we can see that in about 6 months we are down over 60%. Now, firstly, of course, headlines like the one that I just said can be biased, and even though it's true, you should always look at things at different scales, in this case, different time scales, to see what the true picture of the data is. So if we switch over to a 1 week view of the stock data, we can see that we had a nice spike here in the stock charts, up over 30%. Of course, after that, we did give most of it back. However, if we look down here at the news, we can see that volatility burst is likely because of the beat from the most recent earnings report, which we will talk about later. We'll also talk more about the volatility and some trading strategies in the last part of the video. But right now, just quickly, I want to frame my discussion on FuelCell in the macroeconomic picture. So quickly, FuelCell is a company that, no surprise, makes fuel cells which store energy from green energy sources like hydrogen or carbon and convert that energy into electricity. So this is a green energy play, and they do have quite a bit of technology here, actually, as we can see in FuelCell's products here. They do have a few different approaches to yield energy, and honestly, these are pretty cool and pretty interesting from a chemistry point of view. This carbon capture cell here is actually pretty interesting, where they are literally able to pull carbon out of the air that was expelled from burning coal or oil and solidifying or liquefying that carbon, where we can then store that solid or liquid carbon underground or for further use. You can read about each of their products on your own time, and I encourage you to read them, but I want to again focus on the macro picture here. Why is this carbon capture technology so important? Why is this hydrogen or other green energy technology so important for fuel cell companies? Of course, the answer is because of climate change. This is not a political video, so I will not tell you to believe climate change is real or not, even though climate change is very real, but the facts and the numbers are, ever since we started industrial revolutionizing the entire world, the amount of carbon in the atmosphere has skyrocketed, and the temperature on Earth has skyrocketed as well. And now there is a push to limit our release of carbon into the atmosphere by politics and the younger generation. Green energy technology like hydrogen or carbon capture is likely here to stay because of this new green energy push. Because of that, and because of the funding for green energy input into the infrastructure bill in the United States, it is likely that the demand for products like FuelCell will increase for the next few years, which is bullish for companies like FuelCell. So after talking about green energy and how the push for green energy is bullish for the macro story of FuelCell, now let's head on over to the earnings report to see the micro story of how FuelCell is doing as a business. So here we are in FuelCell's most recent earnings report for the 3 months ending on July 31st, 2021, which is this column here, and that is compared to a year-over-year view for the same period in 2020. They also give us a nice calculate percent change column here, where they calculate the percent change year over year, and that's nice because then I don't have to calculate that myself. So first things first here, we can see the top line revenues, which is this line on the earnings report here, is growing nicely year over year to 26 million, which is a change of 43% year over year. And this is good growth and is what I want to see in the companies that I'm looking at. Even more impressive to me, however, is this gross profit here. We can see here that year over year, we actually turned a profit from a negative 3 million last year to a positive gross profit of 1 million this quarter. Obviously, because we came from a negative gross profit last year to a positive 1 million gross profit this year, this indicates that our gross margins are improving. However, this number is a little bit funny and does not actually tell me a lot. But what it may be signaling is that there could be efficiencies that are starting to be found in FuelCell's operations, which allows them to save money. But I would not look too much into this number at the moment, because to me this is not a stable profit margin just yet. I want to be paying attention for the next few quarters to see if they can hold this positive profit margin here. Moving on here, we can look at the loss from operations here, and we can see that year over year, we are actually pretty stable in our loss from operations, and that's a good thing to me. we can see that we're stable around the $10.5 million mark, and we can actually get a better look at this from the detailed earnings report segment here, which I pulled up in this tab. We can see the total costs and expenses here are increasing year over year. However, I want to look at the distribution of where the money is going. And if we look into the detailed view of whether it's going into administration and expenses or research and development, we can see that both of these segments are increasing by about $2 million year over year, and this is actually okay to me. This again is what I like to see in companies that I'm looking at, because if you are a technology company like FuelCell is, I want to see continual investment into research, because this is investing in your product. Seeing FuelCell pouring as much money into administrative and selling as they are into research and development is a good thing to me, because what that's telling me is that they are investing in their product. But going back to the summary here, which is in this tab here, we can see that our net loss is getting a little lighter year over year. We are losing less money from our business year over year. However, it is still a net loss nonetheless. Now, this is not the worst thing in the world. A lot of growth companies operate at a loss as a gamble now in order to reinvest everything into the growth of the company for the future. But if someone wants to invest in a company like FuelCell, that person must also take that gamble as well. Again, the risk here is that the growth rate for FuelCell slows, or that they are unable to ever turn a profit, and that would not be what anyone wants to see if they were an investor in FuelCell. Very lastly here, I want to talk a little bit about share dilution, which we can look again in the detailed earnings report, which I pulled up in this tab here. We can see in this line here for basic and diluted weighted averages of shares outstanding, we can see that year over year, with this being 2021, we can see an absolute explosion of new shares coming into circulation from 2020. We can see that we're coming in from about 217 million shares last year to over 337 million shares this year. Doing the math, this is about a 50% increase in the number of shares in circulation. Again, share dilution is bad for investors because it means that each share should be technically worth less, because a single share now corresponds to a lower percentage of the overall company than what a single share represented a year ago. So after talking about the good top-line revenue growth, good turning of gross profit margin into positive territory, and the controlling of operating expenses, but also talking about the risks here for FuelCell as well, which is the net loss and share dilution, now let's head on over to the trading charts to see if there's a level or two to buy FuelCell if we want to buy FuelCell. So here we are in FuelCell's trading charts, and we can see what a fall from our all-time highs here back in February. We have been in a killer downtrend since then, before hitting this strong candle around the mid $6 level, before rising back upwards and then falling back down to basically where we are at now, around the $6 level. And we can see that we have been at the $6 level for quite a long time, which looks to be forming quite a long base. So this is a consolidation period right now, so I think this low $6 level could be a decent entry point for the stock. If we can zoom in here, we can see that our downside is actually pretty low. I think the bottom end of our trading range here is in the mid $5 level. However, even though this $6 support level does look quite strong, if we scroll back in time here, we can actually see from where we broke out of, from this $2.25 to about $3. Now, I don't think that FuelCell will come down to this $3 level anytime soon. However, that is a possibility, and that possibility is never out of the question. I think that options could be a decent strategy in this case, as we are in the bottom of this $6 range. However, there is not a lot of support between this $3 support level down here and this $6 support level over here. Moving over to the MACD and RSI here, there's not a lot to tell. We can see that the MACD, which is this chart here, is pretty flat right now, which is telling me that there is not a lot of short-term or long-term momentum here. This may actually be bearish for the stock if you are a momentum investor, because what a lack of momentum means is that there is a lack of sustained volatility. If we take a look at these huge candles over here back in February, these large candles present opportunities to make some quick trades and some fast cash, and there are a lot of these large candles, so there's a lot of opportunities. However, if we take a look down here to where we are right now, there's not a lot of sustained huge candles here. Yes, we may get some huge moves like we did a couple of days ago, but the sustainability of these moves, the length of time that there is large volatility, may not be long enough to give people enough time to take advantage for these short-term trades. Trying to time these short-term volatility pushes without momentum may be possible, but is definitely hard and likely will be difficult to do correctly and to succeed. So that was my review on FuelCell stock. Let me know what you thought about it in the comment section down below. If you have any questions or if you caught any mistakes, also drop me a comment down below. If you liked the video, please like the video. If you haven't subscribed yet, please subscribe. And as always, thanks for watching and I hope you have a great day.